the broadening out of the rally, something we talk about a lot as a positive, noting though that equal weight has outperformed cap weight, and we're talking significantly. So let's bring in iCapital Chief Investment Strategist, Sonali Basak. And Sonali, we're going to just show, this is so folks, RSP, that's equal weight versus the S&P. So for a long time, I could have gone up much further. You can see it underperformed, but since late October, my goodness, and look at this big spike here. It's really coming on, a lot of money going into equal weight.
It feels good, doesn't it?
Yeah, it does. I like it. I do. I think it's good. I'm a fan of, or a cheerleader of a broad stock market rally.
Listen, it's so healthy. You think about where we were at the end of last year. We talked about it over and over, how valued or overvalued some people felt that those big tech high flyers were. The fact that 10 companies made up for about 40% of the S&P 500. We like that people are looking in other places. And in fact, when you even look at some of the other places like gold and even international, where you've seen massive run-ups, you can buy just here at home.
Right. Hey, let's talk about something I saw you note that was intriguing. You're saying, okay, this is good stuff, but there's some interesting, like if you really nuance it. So banks are killing it, right? Particularly big banks, they're killing it, but financials aren't. And how do we account for something like that?
There are a few things that you can look at. When you look at the broader S&P 500 financials index, what has sold off? The alternative asset managers has sold off quite drastically.
The private equity stuff?
Private equity, private credit, and actually you haven't seen them go anywhere near back to their highs in like 2024, even 2023. And so they have not recovered. You have seen crypto really weigh on the broader index as well. That might continue to hurt continuously. But also the regional banks can continue to get more of a lift here too when you think about the underlying trends in the economy.
A similar, situation, bifurcation, if you will. Industrials, consumer. You mentioned industrials again. Just look at that monster move. In the meantime, for a while, consumer discretionary they had a similar move, not parabolic per se, but now it's coming down and it's coming down rapidly. Is it just that we have two economies?
We certainly do have two economies, and we wonder how much that K-shaped economy, or I think you call it the French eye, is that right?
Exactly.
And so with those two economies, we don't know if in consumer discretionary we're seeing a meaningful trade down from consumers rather than a more broad health of the consumer. But industrials we do continue to like, but cyclicals and financials are not all trading uniformly.
So your clients are looking for equity exposure. You mentioned international, cyclical, small caps, and private markets. Where in this private market area are they seeing, or is there?
Yep, there's a lot of areas actually, despite all the noise. So that includes, for example, venture capital. We know that there's going to be a bunch of IPOs this year, a really large year for IPOs, but it is also not uniform. So venture capital is a big space. Private equity is starting to come back. We haven't heard that in a while, as you know. And the reason people are talking about it is this is the first year in about 2, 3, 4 years now, last year it being an exception, that distributions are starting to outpace capital calls. So money going back to investors is starting to outpace the money that was being called from investors to put in the ground. So finally, they're feeling the money coming back to them.
Before I let you go then, AI, I also read that you are seeing demand for AI, but the caveat is you got to have some downside protection, right?
Yeah, and you can consider this an alternative exposure because what happens is the banks issue notes and they buy options around those notes so that you can get a single stock like NVIDIA or Apple capped at, say, 10 to 15%, so long as the stock doesn't drop a certain amount, say 30%.
Is that a collar? Is that considered a collar?
It's a collar-like trade, you can buy buffered notes as well, but generally speaking, clients are seeking exposures, including, by the way, right now, we're starting to get calls around software, single names in software. So it tells you to the RSI that you were talking about, people are looking for what has been thrown out with the bathwater to get in.
I forgot, there's one chart I meant to show, is the call options on software, but shattering the record in the last 24 hours, shattering the record like it's never been. So to your point, people are kicking those tires.
It's historic RSI levels right now, historic.